Let's welcome in now JPMorgan's head of global market strategy, Dubravko Lakos. It's good to have you. It's been a minute. It's good to have you back.
Thank you for having me, Scott.
Let's just play off of what we just got from Bostic, and he's not going to vote. So it's sort of moot unless he represents a more hawkish side of the Fed. You suggested, you're bullish for next year, that if the Fed eases further on the back of improving inflation dynamics, S&P could go past 8,000 next year. That's a pretty bullish outlook.
Yeah, so that's we're thinking of that more as an upside scenario, and that would be contingent upon the Fed easing more than just one more time, which is part of our base case, and that's why we sort of put in 7,500 as our base case, driven by a Fed that eases one more time and then basically goes into prolonged pause. If inflation dynamics do come in better than expected or better than feared, I think in that case it does open up the left side of the distribution for the Fed in a bigger way, and I do think that risky assets benefit from that.
Are you not a big believer in the whole run it hot trade, that the Fed is going to be cutting whether it's one or more times into a strengthening economy, not a weakening one, thus the market should be primed to do pretty well? Your 7,500 base case is a single-digit return next year.
Yeah, I mean, I think the economy should be in good shape next year, but I also think it's a K-shaped economy. So I think there are certain segments that are running very hot, but I do think at the same time there's other segments that are actually quite lackluster. And I do think that interest rates could help, ease various parts of the economy that are under stress.
What do you make of the whole broadening idea? This, obviously what's taken place lately, there's anxiety over AI, and then all of these other areas of the market have been doing well. Is that a moment in time, or does that persist?
So I think the AI trade is going through a bit of a digestion and a pause, understandably so, because it has been so hot, throughout much of 2025. I do think that you're seeing definitely pockets of broadening out recently. And we do think the broadening out could continue to run its course, but really only tactically short-term into 1Q. You could have some of these like positive seasonals, as in sort of bottom fishing beginning of January. You guys just talked about like a bit of a fiscal thrust kicking in from the OBBA side that could help the consumer. So I do think there is a number, and then I think various parts of cyclicals, if you will, or value are trading trough and trough when you think about multiples and earnings. So you could get a bit of a lift.
Like what?
So let's say parts of consumer, like low-end consumer has been really beaten up a lot of these plays. You think about cruise lines, restaurants, the Las Vegas Strip, so.
Oh yeah, those stocks have been up a bunch lately, right?
Recently, yes, but they're coming from very low levels.
Yeah.
So that's what I'm saying, like, Home Depots of the world, like you think about like home improvement, parts of housing. So I think these areas could see a bit of a lift, but I would argue it's probably more of a tactical lift. Q1 story, as we think about the medium term 2026, we still think the big story remains centered around AI, where we think big tech hyperscalers remain very well positioned. Utilities we continue to like. Big banks we think are pretty large beneficiaries of AI. And then certain parts of healthcare like pharma.
I mean, you do like large parts of the market which still are going to somehow not deliver that robust of returns. That's interesting. So, right? I mean, you like these big groups. Mm-hmm. Banks and tech and other areas that would fall into that category as well. What are the big risks to your outlook then?
So I would say the risks, the big one I would say is basically the Fed. If the Fed basically closes the door to future easing earlier rather than later, I do think that markets will have a bit of a hard time digesting that. And I think this, call it broadening out trade, I do think could hit a wall in a pretty hard way in that case, and you go back into a very, very narrow leadership. Energy sector is, for instance, one area that we think is becoming increasingly decoupled from weakening oil prices, and we think will be under downward pressure. And then there's pockets of staples, there's parts of industrials, there's other parts of financials outside of banks that we don't think necessarily fare well in this environment.